Hi, welcome to Spotlight on Real Estate. Thanks so much for joining in and watching our video. We have Nick from Oxford Mortgage joining us again today. Hi, Nick. Thank you for coming.
Hi. Thank you. Thank you. I appreciate it.
Yeah, coming from your home office.
Yeah.
So you expressed to me today that there was some very positive news, and quite frankly, I'm game for anything positive. So I've heard some really low interest rates, and what are we looking at? What's so
Yeah.
positive on the lending side?
Well, I think, listen, we're all hearing the negative stuff every day, right? In every different industry and on the news every day. So, but there's a lot of positive stuff going on in housing right now. Rates are at all-time lows. For the last year, we all hear on the radio all the time, like rates near historic lows. They are the lowest they've ever been right now. We're locking 30-year fixed in the very low threes, as low as 3% on a 30-year fixed.
On a 30-year, that's not even a 15-year.
That's not even a 15-year.
Wow.
So rates are really low. Listen, we talked last week or 2 weeks ago. There are some different restrictions that have been put in place to kind of get through this COVID time frame on credit scores and things like that. But as far as interest rates, they're excellent. The other thing we're seeing is there's starting to become more stability in the mortgage market. And what I mean by that is when COVID hit and people were going into forbearance and weren't able to make their payments, there was a lot of uncertainty from lenders. Okay, and uncertainty with lenders is a problem. That's when things get a little weird. They start changing guidelines. But the FHFA came out and said, hey, what we're going to do is we're going to put a stop loss cap on forbearance. And so what they told lenders is, if you got somebody who goes into forbearance for 3 months, after 3 months, they will start paying the lender instead. Okay, so that took some of the uncertainty away from the lender. So now they're more comfortable with lending, right?
And knowing that that's not going to be frozen anymore, that will become liquid again, essentially.
Yeah, exactly. And the other thing that's great right now is that the feds are contributing and investing a ton to keep mortgage rates low. So from everything we're hearing, we're going to see rates either, as low as they are right now, even potentially a little bit lower for the immediate future for sure. So we're excited about that.
Wow. Okay. Yeah. So we talked about how to apply and different things like that. What does that look like timing wise when somebody submits an application to you? Yeah. And assuming they have all their paperwork in order, could you just hit the paperwork again that they need and what that looks like timing wise?
Yeah, so to get let's start with getting a pre-approval, okay? We've got a really slick online application. We call it Blink. You go in there, you do the app, we're notified immediately, okay? And within 24 hours of being notified that your application is complete, we'll have your pre-approval done, okay? And when we do a pre-approval, what we're doing is we're getting a credit report. We're running your scenario through the automated underwriting system from Fannie Mae, Freddie Mac, FHA, VA, whatever type of loan we're doing. And then we're going to make sure that the income and the assets that you put in are consistent with your pay stubs and your bank statements. But all that only takes about 24 hours, okay? From the time you're under contract and we submit your loan to underwriting, within 24 to 48 hours, we have your conditional approval, okay? Yeah, and a conditional approval is exactly that, right? It's, hey, Renee, your loan is approved, but we need whatever, insurance agent's name, updated pay stub, driver's license, whatever, if we were missing something, right?
Right.
So we're still closing purchase and refi transactions in less than 3 weeks from start to finish.
That's awesome. That is
yeah,
awesome.
And part of that is because right now we're also seeing a lot more leniency on appraisals. So through these automated systems, we're seeing a lot more appraisal waivers, exterior only appraisal options from underwriters, things like that are helping to expedite the process a little, but also making it to where a seller doesn't have to let an appraiser into their home. right, at this time when they're a little spooked. Sure.
Yeah. Well, and just from what I know, the amount of clients that are out there waiting are stacking up, right?
Right.
So the quicker that you can get your pre-approval letter, the quicker that you have a great lender behind you. Having Speaking from a listing agent perspective, when I see an Oxford mortgage loan come across on a purchase, I love to see it because you guys don't let things fall through. Now, knock on wood,
Yeah.
there are always crazy things that happen,
Sure.
but
Sure. Absolutely.
the crazy stressful transactions that I've had the last couple of months,
Yeah.
a lot of that can be alleviated by starting with a good lender, and you're right
Yeah,
there.
and listen, and that's one of the things that, for your buyers, that we partner with you kind of from the very beginning, right? We're going to be reaching out to the listing agent to really sell you and the buyer to this listing agent, just so they know exactly, hey, here's how the loan looks, here's where we already are in the process, here's the strengths of the buyer and why you should accept this offer. So it is helpful to partner with a good lender, for the buyers to partner with a good lender, because a lot of times they don't realize how helpful the lender can be in assisting in getting them under contract.
Exactly.
Right?
We can write the strongest offer, but in a competitive market, if you've got the lender willing to make that phone call and willing to talk to the listing agent and to talk them through how your timing looks and your process, that's all the insurance that oftentimes is needed.
Yeah.
So
Right.
great.
Yeah. So
Nick,
yeah, we're really excited. I mean, this is a tough time for everybody, right? We'd be naive to pretend that everything is rosy out there, but as well as anyone, the housing market is still moving. And unfortunately, sometimes when things in the financial world get weird, one of the things that really benefits is things like interest rates, right? So it's just one of the bright spots right now in the world that we're in, and I think a good time to take advantage if you are thinking about buying.
well, and I just want to bring it home with that, in the fact that buying isn't a luxury. At this point in time, with the rental market the way it is in Denver, it costs more to rent almost every single time you sit down and look at it than it does to invest in your future and to put your payment together and to purchase. And so this is a way to sort of, when this is a 30-year fixed and not an adjustable rate, this is a really good way to secure in, despite the little movement that taxes are going to do, right? It's a really good way to lock in what you're going to be able to pay for an extended amount of time so that you can plan around that, budget around that, and move forward. So
Yep, that's exactly right.
thank you so much, Nick. I really appreciate you coming on today, and I look forward to the wisdom and words that you have for next week.